What is happening, everybody? It's your boy, Sean McLaughlin, Options Sean on Twitter X. Today's December 14th, 2023. How's the bull market treating you? Boy, we've been kind of pounding the table for the last few weeks about the bull market being back, but it looks like the rest of the world has finally awoken to the new reality. With the Dow Jones making new all-time highs, S&P knocking on the door. Boy, these are not things you see in a bear market. But before we get into any charts and into any trades, let's drop the old disclaimer here. Everything we discuss is for educational purposes only. I'm showing you what I'm doing with my money. I hope that you learned something from following my process. Now, we always start off with the high level here. And maybe I should have said this just a moment ago that for those of you who watching this jam session for the first time, this is a session where we review for All-Star Options subscribers any action in trades that we currently have on, any trades that we've exited either at a profit or a loss, trades that we've updated our stops on, and we quickly review new trades we've put on. And again, this is all for members of All-Star Options Service, but we like to share this video for everybody because there's something for everybody in these videos. All right, so here's the big picture. Here's the S&P 500. As you can see, the pain trade continues to rocket higher, no end in sight. I mean, the way I see it is it's only a formality before we get to 48.15 and break out the all-time highs. Is that going to happen before the end of the year? I don't know. I'm not going to go out there on a limb and say that. I know there's a few people who are saying that. I'm not one of them. I'm more pragmatic. I don't really care either way. It seems to me that level is going to get tested at some point in the near term, maybe over the next 2-3 months at the longest. But boy, what a rally we've had off of these, some would say scary lows in late October. I was one of them. Both me and Straza were we were a little nervous right here. We weren't liking the look of things, but hey, the market had another opinion. Similarly, we like to look at the VIX every week, just kind of not really for any trading signal, but just it kind of helps tell the picture. And as you can see, based on where we're at now, the VIX is at the lowest levels since before COVID. And so that says to me that the market is pretty complacent and continuing to be complacent, which is, I don't want to say it's an all clear for stocks, but there's not a lot of fear out there. That's really the short answer. All right, so let's review one trade that we've exited this week. In fact, I exited just this morning, Coinbase. I might regret exiting this trade. No, I won't regret it. I'm sticking to the plan. The plan was we bought this on December 7th, so geez, a week ago? No, that's not right. That's not correct. That's when I updated my stop. That's right. We got it in early November. I thought that seemed too soon. November 10th, we got into this trade. We bought a bull call spread using April options. We bought the April 100 calls and we shorted the April 150 calls. We paid $11 for this spread. Now, the plan was from day one when we got into the trade, the plan was if Coinbase got to 150, which is our short strike, that we're short the 150 calls, if and when it got to that short strike, we would exit the trade and take our profits. Well, it got there a lot sooner than I thought it would, but I don't feel bad about that. We exited this trade this morning for a $30 credit, so we nearly tripled our money in this trade. Not bad for, 5 weeks of work. We will take it. And I mentioned it on the morning show this morning if anybody watched. But I also don't feel bad about exiting this coin trade. There could be some, there's another $10 that this spread could earn perhaps if I held it all the way to expiration. But that's, not as much reward to hold this thing for another 4 months because it's a spread. But additionally, I have some other Bitcoin exposure or some, cryptocurrency exposure in the portfolio now. We got into MicroStrategy last week. Was it last week, early last week? So taking coin off is really just kind of taking profits on a bigger crypto play. We still have the MicroStrategy trade on, so don't feel bad about this at all. Hey, we booked a profit. Again, we got out today at 30. I think I saw some of you in the chat got out for a little bit more. Great, good for you. But I got out for 30 this morning. Congrats to everyone or anyone who got in this trade with us. All right, that's the only exit that we've had since we last spoke. Now we have a bunch of updated stops. This bull market has been very friendly to many of the positions we have on, and as such, we're gonna move up our stops to either lock in some gains or at least reduce the potential for losses if we get a big nasty reversal. First up is Palo Alto Networks. We are long the January 250 calls that are well in the money now, which is wonderful. We got into this trade back in June 2nd, and boy, it was a wild ride. It immediately went our way. Things were looking great. Almost sold half right here, which was part of our plan as we laid out when we put the trade on. We wanted to sell half at a double. We got real close right here, but not close enough. And man, I was hating it when it fell off here in late summer. And right on this day here, this is the low of this move. It got so close to tripping our stop loss. We almost got stopped out, but we didn't. This is why we stick to the plan. And it's done nothing but reward us ever since. But it has not been an easy ride, that is for sure. But here on November 28th, we finally got our opportunity to sell half of our calls at 28 bucks. We paid 14 to buy them, sold half for 28. So now we have a free ride on the remaining position. And boy, the free ride is just picking up steam. Stock's trading north of 300 bucks now. It's going great. I've moved my stop up to 280. All right, which corresponds with the little low we had on this pullback back in early November, I believe that was. Or I'm sorry, early December. Yeah, so about 2 weeks ago. So as long as we stay above 280, I'm going to keep holding these calls. But whatever we sell these calls now, the remaining position that we have on, whatever we sell them for, that is our profit because we've already taken out our original risk capital. So we're free riding from here. Hopefully this thing keeps going. These are January calls though, so we're starting to get close to expiration. Once we get into January, assuming we're still in this position on January 1st, then I will start getting a lot more aggressive with a trailing stop. I talk about this all the time when I'm long calls heading into expiration. I will trail a 3 to 5 day low or a stop just below the 3 to 5 day low. I'll use a little discretion on that. At that point, of course, we'll be locking in profits. So no reason to really sweat it that much. But right now the stop is at 280. We've updated the stop to 280. Boy, keep going, Palo Alto. You're making our month. That's for sure. All right, Steel Dynamics. Boy, this one, just 2 weeks ago, we got so close to hitting our profit target. This is a bull call spread that we entered way back on June 12th. It finally started working for us. We're long the January 100 calls and short the January 130 calls. We're looking to sell this spread for 20 bucks, which would be a double of our invested capital. When the stock was trading at about 121 about 2 weeks ago, we got so close. I mean, within like 25 cents or 50 cents of getting that spread executed. And then it sold off hard on us, which was a bummer. But it is fallen down. It looks like it found support around 112. The stock is recuperating today. In fact, it doesn't have today's candle on here. The stock is currently trading at 118. So it's getting back. We're almost back to where we want to get out. Again, we have a resting order to sell at 20 bucks. I apologize for the dogs barking in the background. I'm watching my neighbor's dog, and that's my neighbor's dog making all that noise. All right, next up, Uber. I wanted to bring this up because we are so close to our first target here. We're long the March 60 calls in Uber. We bought them on November 8th. We paid $1.55 for them. Now, when I put the trade on, for those of you who remember, I did not have a stop loss in the trade. It was kind of a all or nothing bet. We were either going to make money on this thing or the calls were probably just going to end up expiring worthless. Well, we have now added a stop because, I mean, as you can see, this chart has ripped. And so I'm now putting in a stop at 50 bucks. If the stock rolls back down to 50, the options will still have some premium left, I assume, if it happens anytime soon. But the stop is now at 50. But more to the point, we're getting close to our first target at 64. If Uber gets to 64, I'm looking to sell enough of my position to take back my original investment. I'm not selling half necessarily. I'm looking to recoup my original investment. So let's just make up some numbers here. Let's say I bought 10 contracts at $1.55. All right. And at 64, If I could sell two of these contracts for, I don't know, $6 a piece, I will do that. That will repay me all of my original invested capital, and I still have 8 contracts left for a free ride to wherever that goes. So that's the play in Uber. If we get to 64, I'm gonna trim a little my position, safely tuck my original risk capital back in my account, and then have a free ride on a big position in Uber. Keep going, baby. It's gonna, by the way, it's gonna get added to the S&P 500, I think tomorrow. So I'm not saying that's gonna rip the stock higher. Anything could happen, but it's notable to know that. Maybe we get to 64 tomorrow. All right, next up, Republic Services, RSG. We got into this back on November 13th. We bought the April 165 calls for 450. Stock is going our way. It's down today. This candle is as of yesterday's close. It's down today a little bit, no big deal. But boy, thing is ripping our way. I'm moving up at my stop to 155 now, just because that's right below a previous resistance. Resistance becomes support. So 155 now is the new stop in Republic Services. Let's hope this thing keeps going. Finally, I'll just quickly touch on the 3 trades that we've added since we last spoke. I mentioned MicroStrategy. I guess I entered this on Friday. I'm not going to get into the details of these positions here. Hint, they're all bullish trades. But if you want the details, you can go to allstarcharts.com, go to the members section, go to the options section. You can find blog posts for each of these trades. You'll have why we're getting into the trade, the setup that why we like the setup, the strategy we're using, where our stop loss is, where we're taking profits, all the details, everything you need to know about each trade strategy is in there, found on the blog. If you don't have access to that, please reach out to us and we'll get you hooked up. But MicroStrategy is a trade we got into on Friday. Spot Technology, Spotify, we got into on Monday. Loving this base on base action. And Autodesk, also a couple base resolutions here. Got a big rounder base here, and then this coil, both of them resolving higher. Got into this one yesterday. Again, everybody, find these details on the blog. If you have any questions or if you want to get involved in All-Star Options, shoot us an email, info@allstarcharts.com. Have a great rest of your trading week. I know I will. I'm going to have a great weekend. You too. We'll talk again next week. Until next time, take care.